So what happens if you're laid off and you're on unemployment, and if this $600 per week additional runs out and you're not able to make your mortgage payment? Well, one of the first things that happened with the CARES Act was that the government said banks must work with borrowers to go into forbearance, and that just means that you're going to work out either a 3-month or a 6-month no payment plan and add that to the end of your loan, or some other terms that you work out with your lender. And the CARES Act specified that the lenders must work with the borrowers. So the number of mortgages that are in forbearance actually has fallen, and we see that as a positive sign that people are able to have that income getting reestablished and they're no longer needing the forbearance. So they've maybe chosen the 3-month plan and they're not needing to have that extended. Also, I wanted to show you how the Consumer Finance Protection Bureau has set forth rules that no foreclosure can be started until August 31st of 2020. And also that if you experience financial hardship, you have the right to request a forbearance for up to 180 days or 6 months. And then you can also request another extension of 180 days. So that's up to 1 year to be able to get back to work, be able to get yourself financially sound and stable, and be able to get those payments restarted. So there are some protections out there for you, and I want to make sure everybody understands what they are, what their options are, and that you can contact your lender to discuss those options.
Let's talk about the equity that homeowners have that are seeking forbearance, and that's something that isn't covered a lot. If you look at this slide, you can see that of the people that are actively seeking forbearance and are past due on their mortgage payment, 59% have in excess of 30% in equity, and a total of 77% have at least 20% equity in their home. So they are not likely to walk away from their home or to go into foreclosure. There are other options that are available. And in fact, Black Knight indicated the high level of equity provides options for homeowners, policymakers, mortgage investors, and servicers in helping to avoid downstream foreclosure activity and default-related losses.
Finally, we want to let you know that if you are in some financial distress and you need that relief, there are alternatives to foreclosure after forbearance. You can extend the forbearance, as we said, for up to 1 year, and you do have those protections from the Consumer Finance Protection Bureau. You can also seek a modification of the loan. And then lastly, if you have to, you can sell your home. So our job is to help you protect your equity, and that is number one. If you need any help at all, we would be happy to set up a Zoom call or an in-person consultation to be able to go over the options that are available to you, instead of having you wait until the last minute when you really feel so much pressure to make a decision. Let's see what we can do right now to give you some relief from that stress.
If you're a homeowner that has equity, don't walk away from it. Protect it, and we can help you.
Give us a call at 951-660-5926. We're happy to help.